What's going on, guys? This is Matthew Trades Effects back with another video. Before we start, I just want to give a shout out to all my subscribers. I want to thank you guys for the feedback on the last video. Hopefully we can grow this channel, but I'm back again today with another trade review on the euro dollar. And today we're gonna share little insights on these ICT concepts for you guys. And we're all in it for the end goal. So let's get into it. If you don't know me already by now, we get straight into these videos, so let's get into it. Euro dollar daily chart. What can we see? Let's delineate Monday's open here. So when the week starts, you want to already have a bias of like, what can the week bring me? Is it going to be a bullish week or a bearish week? Let's just get rid of this line and let's go back up a time frame and go on the weekly chart. Before this candle, say this candle never wasn't here and we only had this candle close. So this would probably be in a scenario like on a weekend, which this was me this week, last weekend. I came to the chart, I'm like, hey, what's the euro dollar most likely to do next week? So the only way we can get to a bias or even like an explanation, you have to go back into price action, right? What can we see? I see that we are bullish on the euro dollar, right? So I wouldn't want to just try to call the top, because we're not in the game to call tops and bottoms. So I'm already thinking we're going bullish because of the bullish nature. But that can't just be your analysis. You have to bring in time and price. So with price, I seen this bullish order block that was created a couple weeks back. And I noticed that last week's price, we went lower. We picked up a discount on this bullish order block. And we closed, pretty indecisively. Going into the next week, I'm already thinking we're gonna have a bullish weekly candle. And with that, guys, you already did what 99 or 95% of traders cannot do, which is predict the direction. Like, that's why traders fail, guys. You have to know what the direction is, where price is going. And if you don't know where price is going, you cannot enter in that direction. And if you can't enter in that direction, you're entering in the wrong direction, which means that you're going to fail. So first, guys, you have to know where price is willing to go, or has a most likely, direction to go. And this week, I'm already thinking this week, the 12th to the 17th, I'm already thinking bullish pricing. So let's get back onto that daily chart. For today, I've seen this fair value gap here, and I'm only looking to trade price, or I'm only looking to trade when I get a daily IPDA array. So basically a daily price level. It's not a zone, it's not a guess, it's a exact price level where I want to see price hit first before I go down to a lower time frame to buy or to just interact with price, right? So with that being said, every day you come to the chart, you have to have a specific price point that could either be the low of the day or the high of the day, and you'll eventually get that. But if you can figure out the high of the daily candle, like what price point or what price level that high would be, you already unlocked such a high. It's just hard to explain. You already unlocked where you should be getting in. You want to be getting in at lows and highs of the day. So if you know that, hey, this fair value gap, if we trade into it, that might be the low of Thursday. I'm already saying, if when price hits that fair value gap, I'm going to go down to a lower time frame and I'm going to look for a buy. So let's do that. It hits it, I go down to a 4 hour. Okay, what do we see on the 4 hour? Can I refine it? Of course I can. There's a fair value gap right here. There's a fair value gap on that 4-hour chart. From high to low, there's a fair value gap. But since that daily fair value gap was on this old high back here, I'll just, I'll leave it. I'll leave it here. So this is my fair value gap. Once price traded down into it, I'm looking to go long. So I go down to an hourly chart, and the hourly chart. So from a daily to a 4-hour, you can refine. From a 4-hour to a 1-hour, you can refine. But after a 1-hour chart, I'm not really looking to refine any real level. That's where my setup would probably form. Or that's where the price level for my setup intraday will form. And I'm going to show you guys that now. So as you see, that daily fair value gap, we trade down into it on the hourly chart. We get nice bullish reactions out of there, showing, and it's giving you a sign that, hey, we're having a hard time going lower. This might be because we're in a discount. Why are we in a discount? Because we're hitting a daily bullish PDA array, right? So now let's get strictly into the daily range. So I'm gonna mark out midnight, which is my true day open. That's what ICT calls it, a true day open. Usually price opens around like 5 p.m. But we don't want to really use that price. We want to use the price that's opening at midnight. That's your midnight opening price or your true day open. And me personally, true day close ends at 3 p.m. New York time, but I would just draw my lines out to 12 noon, because after noon, for Forex at least, that's London close. That's the end of London close, and I don't really want to be in price action after London close unless it's like an FOMC type of event, or if there's news around, or if there's news after 12, if that makes any sense, afternoon. But at 12, I'm looking to close out my computer and go about my day. So this is my time for the day. This is my daily range that I'm looking for. We're still in it. We're in London close right now, which might be the end of the range, but we'll see. So as you guys can see, we have our time now. We have our time and price, the day, and we have our price, which is that PDA array on the daily chart, the fair value gap. Also, on an H1 chart, I like to look at liquidity aspects. These old swing lows here, they have sell side liquidity below them. So let me draw that out. Sell side liquidity. So look, if we're gonna take sell side liquidity into a bullish daily order block, fair value gap, I would love to see price go higher. And where can price go to? Low to high on the H1. Let's get a fib. You get your 50% level, and you look above that. Look at all the PD arrays above that 50% level and see those price points. So let's do that. See this last up candle. Draw that line out. Make this a different color. So we have this level. We have that opening level as well. I can draw that out. And then you have the old high, of course. But for the old high, I'm going to just mark out that's buy side liquidity. So look how we have our market now. We have that daily level, which you always want to be trading from a daily level. If you don't do anything else and you just trade from daily PD array levels, I promise you'll usually be trading at the low today or high today, or you'll be trading at a key turning point. Trust. Intraday. If you're an intraday trader. If you're an intraday trader, you need to have all your daily PD arrays on the chart. That's the last time I say this for this video. So we have that PD array, and we also have these target areas that we can look for in a premium, which is this old high, that buy side liquidity, the opening on this up candle, and then the low, right? So you can mark out the gap here. You can mark, this might be the actual bullish order block. You can mark that out too, but these are just some levels in mind that I have. So we have sell side liquidity purge into a daily. Let's go down into a 15-minute chart. What do we see on that 15-minute chart? We see price hit the daily IPDA array twice. But what time did it hit? This candle was 4:15. That's London open. That's around the London open kill zone. From 2 a.m. to 5 a.m. Eastern time. So let me just draw out 5. So this was all of that London price action. You can see that they went lower. And then New York, we open at 7 a.m. So all of this in here is, we're not trading. This is the London lunch. So we're not trading in here, even though it tapped in to the IPDA array again. So when 7 a.m. opens, what range are we in, guys? We're in from this low to this high. So at 7, I'm looking at this bullish order block because I'm looking to buy it anyways. So if I can buy on a bullish IPDA array, that would be ideal, which I did. So let's draw out this bullish order block here. And as you can see, price tap, 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 but then finally gave up the ghost. Went straight to that level I delineated, pulled back, but then just went straight for all of the premium levels. And then of course hitting the buy side liquidity, the old high, the old daily high, Wednesday's high, yesterday's high. There's so many names you can name for this specific high, right? Go down to a 5-minute chart. It's pretty obvious why I went long. This bearish or bullish order block here. We open, we trade down. That protractionary state, tap it so many times. Look how many times it gives you to be to be a buyer. 1, 2, 3, 4, 5, 6, 7, 8. 8 times smart money could have bought at this level, this specific level, not a zone, not a area, this specific level. What's the opening on this candle? 1.0616 and 1 pipette. If you were long anywhere in this candle, you're right. And obviously we can see what happened. So let's run it back over. We were already expecting a bullish week, right? If we're expecting a bullish week, there's 5 days in a week, 5 trading days in a week. More than one of those days should be a bullish day, right? If we're expecting a bullish week. So Thursday, I'm looking for a buy because I know I'm in a weekly candle that is predisposed to go higher, meaning that daily candles in that weekly candle will be predisposed to go higher. So if I'm a seller this whole week, it would make no sense. But obviously you can see you could have caught a sell in London. But I'm not looking for that. The reason the people that sold in London, the smart money guys that sold in London, they're only selling to buy it back at the daily IPDA array, which is the daily fair value gap. But once it hits that fair value gap, they're offsetting their orders. You see they exit here and they exit here, right? But then when we get a rally and then 7 a.m. hits, which is a kill zone, time and price, you always want to be waiting for time. Okay, they probably took their nap. Now it's time to buy again after 7, which I did. After 7 o'clock, I'm looking for a lower move because ICT talks about this a lot. So I'm going to go over it real quick. Before a kill zone or before New York true daily open, which is midnight, there's usually something called a protractionary stage, which means that price would go the opposite way from the predetermined price move. So let me give you an example. Today we are looking for a bullish day or a bullish move. At 7 a.m., that's the London kill zone. That's the New York kill zone. I want to see a false move from my predetermined bias, which is bullish. So if I have a predetermined bias that's bullish, the false move would be a down move. And as you can see, we have this nice down candle at 7, automatically going to that price point. 7 a.m. candle goes strictly right down to pick up more buys on this bullish order block. Why would this bullish order block be valid? Number one, we had it on that 15-minute time frame, which is our benchmark, inside of a bullish fair value gap. So the confluence is it's pretty high. We have a specific price point that we can buy the euro dollar, and we can frame it from low to high. Let's get a fib on a 5-minute chart. Low to high. Let's put it on this. Yeah, low to high. Below the 50%. So from low to high, this is a discount. You want to be a buyer below the 50%. You could be a buyer a little bit above it, but as long as it taps, that's why the wicks came down into a discount. So anywhere buying below that 50% or on this opening price of the bullish order block, you're fine. And from that H1, we already put those levels that we think that we can hit here, and in the buy side liquidity, right? As you see, we got a nice rally, went straight to that bullish order block, or that bearish order block, gave a little retracement, retraced into a fair value gap, and then obviously went for that bullish, that buy side liquidity. So let's show you guys what we did today. Let's get this on going. Right, so this is what we got into today.